Growth was sluggish in the second quarter. Sreesankar, head of institutional equities at Prabhudas Lilladher, now joins us on this conversation to discuss the fine print of the quarter gone by. Sreesankar, thanks so much for joining us on Bloomberg. What did you make of it? Was that on expected lines for you, the quarter per se?
Yeah, more or less on the expected lines only. There was not much of disappointments or surprises, let me put it up that way. Some of the surprise, the one surprise was in Britannia, and I think across the board the street has actually come out and revised their expectations about the company going forward. And in fact, we too have revised our earnings upwards for the company because stronger margins coming in. And thanks to a lower commodity prices across the globe, across the country as well. That's one of the surprises, if you ask me. And other than that, more or less, it has been fairly stable. If you ask for disappointments, yes, capital goods, people were anticipating much more to happen, or rather, probably, the general street expectations were much stronger in terms of early economic recovery and feeding into capital goods. That has not materialized. So from that point of view, is capital goods disappointed? So I'm not unduly worried, and I tend to believe that our expectations were a bit premature. So you probably will have 2 quarters further lag in the capital goods performance, and it should start to catch up down the line. The real growth in the entire segment on a year-on-year basis, to me, it has been cement. Cement has come out at extremely strong numbers, and in fact, it has been reflected in most of the cement companies' valuations as well.
Sure.
And in fact, if you really look at around $110 around for a EV per ton for a new capacity,
Sure.
The good companies are quoting at anyway from $150 upwards. So the market has already discounted that good numbers, which was expected from them as well.
Right. I want to talk about a few companies in specific that sort of beat expectations. Let's start with L&T and Hindalco. What do you make of it?
See, L&T and Hindalco, I mean, to me, it's two ends of the spectrum. One is a commodity company, the other being an infrastructure-related story. L&T on a consolidated basis, even if we look at it, yes, it has got one portion which is IDPL, which is into that asset owner. It has got its own kind of problem. It has got capitalized. To me, I think the story, unfurling of L&T story or the infrastructure story has not been done yet. So there is an opportunity which still exists. And I also believe within that infrastructure space, there are very few companies which still do have the cash flow that is required, and L&T will be there to get the benefit of it going forward very well. That's one. Second is Hindalco. Hindalco, again, yes, we like the company, but at the same time, it's a global commodity. So it's going to, the performance is going to depend upon one is on the what is on its what do you call global operations, and one is on the Indian operations. I think it's more or less a global price product. So the market is also going to discount to a great extent depending upon how the global prices behave. The good thing is, among the global commodities, aluminum has been a better performer for the better part of year on year,
Sure.
as well as for the last month, plus year to date, etc.
Right. Of the banking names, Sreesankar, we've seen Axis Bank stand out quite significantly this quarter. Would that be on your top picks, and what did you make of the banking sector as a whole?
See, within the bank, let me put it up this way. We believe that if we are bullish on this economy, the first sector that we need to be bullish on is financials. So ever since we went into this overdrive in terms of an economic recovery and expectations of a stable and strong government at the center, we have been saying that financials is one of our topics, and financials continue to be our favorite. No questions asked, including and automobile as well, because that's where you see the benefits of it beginning, or the immediate benefits of a recovery being felt through. Financials continue to do so, but within the financials, we are relatively favoring private sector banks. And Axis has been one of our top picks till this month, and this month we have moved from Axis to ICICI Bank. And we continue to like HDFC. We
Why
like
is that?
ICICI Bank.
Why is
in
that,
the private
Sreesankar? Sorry
sector space,
to
from the
interrupt, but
valuation
why is that?
perspective,
Why have you shifted focus from Axis to ICICI Bank?
The simple reason is Axis had its great run. Axis had continued to perform, and we had an argument earlier. Axis need to get a valuation upwards. We favored Axis to ICICI Bank at one point of time. That was, if I remember correctly, it was almost eight months back or so.
Okay.
So that call has been right. Now we continue to believe that ICICI's whatever issues that they had, that has got sorted out. Now ICICI will also, the relative preference from a valuation perspective and risk return profile, we now begin to like ICICI. That's the reason. Otherwise, we like both of it. If you ask me relatively, this is the call right now we are having. Yeah.
Interesting. I have one final question, and this is with respect to the IT space. You have seen Infosys perform better than expected, at least in the last quarter. How do you see the top tier IT companies performing? Do you see earnings momentum stay where they are, or are you seeing some sort of kicker come in?
Okay. First of all, no, for the entire IT space, how does it perform? To me, to us rather, the demand environment should remain robust. So most of the IT companies or the top tier IT companies have got a large amount of business coming from US. Those who are firmly entrenched in US will, in my view, is continuing to see the demand environment remaining robust. So I think the business outlook for them will continue to remain robust, and so will be the performance from these companies. That's number one. Number two, then comes to the other part. Infosys has outperformed or done very well, but it has underperformed earlier vis-a-vis a TCS or anyone, a lot of those stocks.
Correct.
Again, Wipro, an underperformance, etc. So the management change in Infosys, probably the expectation that what issues that they had earlier is getting fixed, and it's our analyst believes that going forward it will probably it will take a couple of more quarters for the full benefit of that management changes and what Mr. Sikka is trying to do, implement in Infosys, starts benefiting in the company in terms of its performance. So now, once that happens, we believe that there will be much more of a stronger outperformance coming in that case by Infosys. And we like Tech Mahindra, we like, we had Wipro in our top picks, which we have removed in this particular month, which we believe that Wipro is not delivering as per expectations. You know, it's yet to deliver. So we have removed Wipro and added Tech Mahindra into our topics.
Sreesankar, good talking to you as always. Many thanks indeed for joining us. That's
and again, some of the smaller companies, you know, we like KPIT and everywhere.
Sure.
Thank you.
Thank you. Thanks so much for joining us with your views. Sreesankar from Prabhudas Lilladher talking about the IT sector and some of the stocks that he likes. We've also been talking to a bunch of market experts on what they made of the earnings season.
In 2011,